Hey, what's up guys? My name is Daniel Lopez with Invest in You Finance, and today we're going to talk about the risks associated with investing in the stock market. Ooh, the stock market's like gambling. Oh, you're going to lose all your money. I'm sure you've heard people say this, but that's not always the case. I want to show you guys how I lost $3,000 investing in the stock market, and hopefully it will help you avoid losing any money in the stock market. Like I always talk about in my other videos, invest in an S&P 500 index fund. That's probably a safer investment than investing in individual stocks. Well guys, for today I'm going to show you guys a story of how I lost those $3,000. So here are the stocks that I bought. Back when I was younger, I was willing to take on a lot more risk, but I was willing to achieve a higher reward, because with the higher risk stocks, you can get a higher rate of return. So the stocks that I chose were Nintendo and Zynga. And I bought 64 Nintendo stocks and I bought 480 Zynga stocks. The total purchase price, the cost basis for the Nintendo stocks was $4,870.40. The total cost for the Zynga stocks were $4,999.20. That's how much it cost me to buy all this, which is a total of $9,869.60. So this is how much everything cost me. And I ended up selling these stocks at a loss. I sold the stock for $3,755 is how much I sold Nintendo stock. Zynga stock, I sold it for $3,117.58. So I took a loss on both of these stocks. After I sold them, I only received $6,870.76, which leaves me at a loss of $2,996.84. And this is the risk of investing in the stock market when you invest in individual stocks. Investing in the market is like riding a roller coaster. Your stock is going to go up, it's going to go down, it's going to go up. But over the long period of time, history shows the stock market has always increased little by little over 5, 10, 15, 20, 30, 40, 50 years time period. I bought these stocks because I thought they were going to grow and they were going to beat the stock market. They didn't, and I just wanted to cut my losses. I lost $3,000, and ultimately it was just a lesson to learn. The lesson here is if you just invest in an S&P 500 index fund that just tracks the market, chances are you won't get these kinds of losses. Yes, if you buy, say, $10,000 of an S&P 500 index fund ETF and like the market is down 20%, in your account, that $10,000 is going to be worth $8,000 at the time that the stock goes down 20%. However, that's not a realized cost. It's only realized when you sell. So if you sell it like I did, then it's a loss and that's it, you lost that money. But if you keep it in the stock market, over time, because you bought an S&P 500 index fund, it's going to increase over 5, 10, 15, 20 years. That's why it's important to note that investing in the stock market, for me, has always been a long-term approach, 5, 10, 15, 20 years. I mean, all the way up to 30, 40, as long as I can invest for. Because if you're looking to invest for the short term, then you can do that, but the risks are in the short period of time you can lose money. And I just wanted to take my loss, sell the stocks, and just invest the money into an S&P 500 index fund. I was able to take a deduction on my taxes because you can write off up to $3,000 against your gross income. So for example, what that means is that if I made $53,000 for the year, when I pay my taxes, I get to subtract this loss. So I'm just rounding it to $3,000. So that means that I will only pay taxes on $50,000. Now, I'm not saving dollar for dollar because the way the tax system works, where the United States is a progressive tax system. So instead of paying taxes on $53,000, I just pay taxes on $50,000. I still owe taxes. I just won't owe as much because my income for that year was reduced by the loss. Now the maximum amount that you can deduct is $3,000. So this is how much I was able to deduct in the example. And if you have a loss that's over $3,000, you can carry it over to the following year. So just get with your professional tax advisors to see how you can apply this loss to your taxes. But I just want to share with you guys how I lost money in the stock market and how investing in the stock market, it's not all fun and games. You are going to lose money if you sell. For instance, if you put that money in, I would recommend that you only put money in that you won't need immediately right away. For example, I did not need this money right away. I knew that I was investing it and I would pull it out eventually later on in the future. But if you're investing this money and you know that you need this money 6 months, a year, 2 years, 3 or 5, a few years down the line, then just make sure that what you're investing in is not going to lose value. Like for instance, these stocks, I was just risking this amount of money knowing that they could potentially drop a lot further than, let's say, an S&P 500 index fund, because they're individual stocks. S&P 500 index fund, you're investing in a big group of the whole total market of around 500 stocks. This, you're just investing in one company. Zynga is just one company. Nintendo, that's just one company. So they could take a 40% hit, 50% hit. But I just want to share with you guys how I lost money and how now my strategy going forward is just to buy S&P 500 index funds and not invest in individual stocks. Because when you buy an S&P 500 index fund, you're buying Google, you're buying Apple, you're buying Tesla, you're buying Berkshire Hathaway, you're buying all the good top stocks that are out there in the market. But of course, I just want you guys to know that investing in the stock market is risky. However, in the long run, if you're not investing in individual stocks and you're investing in the S&P 500, you have a potential to increase your stocks at a rate of 7 to 10% over the long period of time. And this is just an example. I just want to share with you guys how I lost this money and how I was able to write this off on my taxes. So once you guys get more familiar with stocks and taxes and, you know, selling your stocks, like I talk about in some of my other videos, first in, first out, last in, last out, the tax lots, then you can see what I'm talking about. But just know that you can make a lot of money out there, and all you have to do is just invest consistently. You can go see my 401k video. That video shows me investing for 10 years, maxing out my 401k. And over those 10 years, I was able to accumulate over $500,000, maxing out my 401k and putting money in there. In the 401k, all I'm investing in is an S&P 500 index fund. So that's just proof. And if you go watch the video, you can see over the years and over time, the money grew because I was investing consistently every paycheck into my 401k. Let's pretend that that wasn't a 401k. Let's pretend that was my individual stock account. Well, I would have had $500,000 in my individual stock account if I was investing the same amount of money that I was investing in my 401k. I just chose to max out my 401k to reduce my taxes because my income was high and I wanted to reduce my tax liability. Anyways, guys, please consult with your professional tax advisors. Please consult with your financial advisors. I'm not a financial advisor. This isn't financial advice. I'm just sharing a story that happened to me. Hopefully I can help you guys save money by not investing in some individual stocks. Like I said, you want to go out there, you want to look for a good S&P 500 index fund, and just by staying consistent and staying the course, compound interest is going to help your money grow. So thank you for watching. Go check out my other videos. I appreciate you guys. Take care and have a good rest of the week. Peace.